Bright and breezy. Just got here in the nick of time. Obviously a busy morning.
Yes, it has been quite busy this morning, Zach, actually, yeah.
Right, any panic amongst the ranks?
No, not at all. Things are pretty much playing out as we'd anticipated. And so, you know, we're quite happy with the way things are going at the moment. Could always be a little bit busier, I suppose, in terms of volumes, but it is the summer and we must expect things to wind down.
Total July holiday mode for some people. Right, okay, let's go on to the actual markets themselves. What's been going on? Okay,
well, one or two data points this morning out of Europe. I picked on a couple that caught my eye. Firstly, Italy, industrial orders for May. We're looking at the month-on-month figure here, are down minus 2.5% versus a forecast of plus 1.1 and a prior read of plus 5.5%. Now, I should point out that prior read, I think I'm right in saying, was revised higher.
But somebody didn't do their homework very well, did they?
Well, not really, no, and it's a big miss, isn't it? A negative 2.5%, you know, when we're expecting a plus 1.1%. Perhaps this number in turn will be revised at a later date. Nonetheless, slightly
just
worried.
Painful. It's just a painful figure, isn't it?
Yeah, and it is when you consider that, you know, you'd count Italy as the third largest economy in the Eurozone. That's not what the powers that be in Frankfurt want to hear. There was slightly better news next door in France with the with the French business confidence number for July. Came in at 102. That was against the forecast of 100 and a prior read of 100 as well. So French industry feeling a bit more bullish about the outlook. Perhaps that's on the back of some sort of settlement in Greece. And then back to the UK. We had the Bank of England Monetary Policy Committee minutes released this morning. No surprise, perhaps in the fact that they showed 9-0 in terms of voting for no change. And you might recall we've had a couple of people who were sort of effectively sitting on the fence. The description today was that it was a close call for some members to vote for no change. So I suppose we might see next month.
It's not very helpful. You've got the governor saying that rates are going up in December, January. But the minutes are nowhere. There's nothing there on the horizon at all. I mean,
well, I mean that
you sort of think, well, why don't you just leave it up to him?
Well, possibly.
I have 9 people or 8 people.
Well, it's meant to be democratic, isn't it? It's meant to give you a balance of views. But I think if you look at the language from many central banks around the world, let's say one thing in a statement, the data tells you another, and then, you know, particularly in Japan and here in the UK, the governors say something completely different. In the Fed, of course, in the States, the regional governors, you know, all off at tangents and often, you know, completely opposing views. So it's sometimes hard to make sense of it all, I agree.
Okay, well, let's head off to the European movers.
Okay, well, staying in England, or the UK, I should say, today. Firstly, with ARM Holdings, that's ticker ARM in London and ARMH for the US line. Positive numbers this morning. However, the shares have fallen sharply on the Apple effect, and we'll talk more about that later. And the stock has been downgraded to sell at the brokerage Librum, 999.7.
Very positive numbers, actually. That's something to note, isn't it?
Yeah, no, they were very good, but
not good enough.
No, but these kind of stocks are so full of
sentiment.
Yeah, and expectation and hope. It doesn't take much to dent them, and although Apple isn't their biggest customer, it really is the bellwether for sentiment in the sector. And then EasyJet, ticker EZJ in London, £17.35, up just over 4%, 4.17%. They've said that strong summer sales will drive a gain in full-year earnings after their spring dip, and that some 77% of the seats they've got on offer for the second half of 2015 have actually already been booked. What makes me wonder here is why they took down the guidance in the first place in the spring. If they, and they said specifically that they weren't looking forward to a buoyant summer. Well, they were completely wrong. So maybe they'd have done better to have said nothing.
Some people, I know that's the thing, that we always assume that management know everything about their business or their sector, but not always the case.
No, I don't think it is, and I think this is a classic example of where they've missed.
But at least they've guided cautiously rather than over.
Yes, I mean
which is obviously much better appreciated in terms of the share price.
Yeah, the market always prefers you to beat guidance than miss it, and so as you say, better to be cautious than over optimistic, I suspect. So.
All right. Well, next up is the M&A.
Okay. Well, this is a very interesting story. broke late yesterday afternoon. Consortium of German auto manufacturers is to buy Nokia's HERE mapping business for around €2.5 billion, and the consortium's made up of Audi, which is owned by Volkswagen, BMW, Mercedes, which is part of Daimler. Interestingly, the three German auto stocks are down on the day, so I'm not sure if the market, if that's more to do with the market or the stocks.
It might be themselves. To do with the walking into a minefield, given Microsoft's experience of the Nokia kiss of death.
Well, quite possibly. Nokia itself actually is also easier, down about 0.3%. Nokia had been hoping to achieve a higher price, something closer to sort of 3.5 billion euros, but it looks like they'll have to take that lower figure. If it does go ahead, this deal, then that will effectively complete Nokia's transition into a telecoms network in play. Just to put the purchase price into perspective, Nokia spent $8.1 billion in 2008 buying a company called Navtech Corp in the US, which became the HERE mapping business. So they're cutting money hand over fist there in getting rid of it, but they just, don't want to be in
the old US elephant's graveyard effect coming into play.
Oh, absolutely. We talked quite a few times about deals that are done in haste and unwound a few years later for a big loss, and there's another example of one. What's interesting as well here is that, of course, Mercedes, Audi and BMW, fierce rivals, but they've cooperated together in an effort to stop Google dominating this mapping and driving space in a future where we'll have smart and some perhaps even autonomous vehicles, and also that they may invite some of the other auto manufacturers from around the world to join the consortium later on.
Almost a panic move.
Well,
almost.
You could read it like that. The deal's actually been seen as well as being negative for the likes of Garmin, which is GRMN in the US, and TomTom, TOM2 in Amsterdam. Obviously, direct competitors to that Nokia mapping business. TomTom, interestingly though, has announced its own partnership with the auto parts group Bosch, so that really just leaves Garmin to some extent out on a limb. So it'll be interesting to see how they trade today. Not a done deal yet, and the fine detail to be agreed, but it's one to keep an interesting eye on, I think, going forward.
Well, let's go to the US data points.
Just a couple of data points related to the housing market today. So we've got existing home sales for June, a forecast of 5.4 million versus the prior read of 5.35 million. The recent trend, I think I'm right saying, since April has been higher. So if we get a figure at 5.4 or above, we'll be continuing that move higher. And then the Federal Housing Finance Agency, FHFA, house price index for May, a forecast here of house prices growing by 0.4% versus a prior read of 0.3%. And again, the trend has been modest growth of late, and no reason to assume that won't continue as we go forward.
Okay, let's go on to the movers and levels.
Right, well, it's all about Apple, I think. The press is certainly, and I'm sure much of the market action this afternoon will be. $1.23.03, they traded in the pre-market down some 5.9%, where they had been lower. At one point, about $66 billion had been wiped off of the valuation. Earnings beat, but the guidance was lower, it was weaker, and iPhone sales were disappointed. And as you rightly pointed out, they did try and cover up the lacklustre performance of the watch. So they're not in investors' good books today.
I said it was a good start.
Well,
which sounds very limp indeed. But anyway, their competitor also not doing very well.
No, Microsoft, that's ticker MSFT, $45.30 pre-market, down 4.2%. They lowered their revenue guidance by around 10%, and they took an actual loss, mostly due to those huge write-offs against Nokia. Yeah, about $7 billion, if memory serves, that they wrote down on the mobile phone acquisition. So, not a good day in the world of tech. In terms of levels to watch here on equities and currency pairs, first of all, staying in Europe with the FTSE, 66.90 is our new downside level, plays 67.70. European markets are a bit easier for choice today. And the DAX has come back quite hard as well. So we're now looking at 11,500 on the downside, plays 11,610 to the upside. Just want to point out that the price move today has seen the DAX fill one or two of those gaps that it's left behind. And there's, as I said, there's plenty more further down, so we may see some more of that to come. And the S&P 2115 plays 2130, and in the Dow 17870 plays 17940. Again, we're really searching for directional cues for the two US indices. In the euro, we saw a dollar weakness yesterday, so a euro rally, so we're back to 109.03 on the downside for the euro, plays 109.60 to the upside. Aussie dollar, not much change from yesterday, 73.90 to the downside, plays 74.30 to the upside. In dollar yen, again, just a slight change to the range, but 123.50 on the downside, plays 124.12 to the upside. And cable, a little bit better, but not flying out of the traps, as you might expect with Mr. Carney's comments again yesterday. So 155.77 on the downside and 156.27 to the upside.
Okay, thank you. Darren Sinden, market commentator, Admiral Markets. That's it for the Wall Street Crossover Show today. We'll be back at 1 p.m. tomorrow.